Hi there, welcome to kneppyinvests. In this video, I'm going to be talking about a small company called Fenix. It's really a small iron ore producing company that has just recently gone into production. So when I started reading about this company towards the end of 2020, they were not making any money, not in production, and they were soon going to come into production. So I decided to put them onto my watch list and just wait until the April quarterly activities and cash flow report from the company. And they released those two reports on April 23. And it's fair to say those two reports did surprise me. I was pleasantly surprised by what I read and even excited. So I took a small initial position the day after they released those two reports, and I'll probably or possibly increase those positions if I continue to like what the company is doing over the next 6 months or so. So in this video, what I'm going to do is go through the reasons why I took a small initial position in the company by looking at their activities report and then focusing on the cash flow report. Now, if you know anything about me, you know that I love a company that has just become operational cash flow positive, and Fenix definitely fits into that bill. But more exciting, they are highly operational cash flow positive, and there is the hint. Management did give the hint that they're actually going to increase the rate that they're operational cash flow positive in the following quarters. So before we get into the activities and cash flow report, just a few facts around this company. Fenix is an iron ore producer, a small one at that, but definitely in the right area for the time being. Not sure how long this iron ore boom is going to last. Who knows? It could last a few years longer, particularly all the problems that are happening in Brazil right now. So definitely in the right space, and they're definitely taking advantage of being in the right space right now. And so for me, they have to try to make as much money in the next few years before that cycle and the iron boom falls away. So market cap of only $135 million, and that was taken on the day after they released those two reports on the 24th of April, or would have been maybe the 26th of April. I forget which trading day was the next one after that. Now, you can't really look at the trailing 12 months of revenue and operational cash flow and really take anything away from that, because that was before they went to production. So revenue, of course, is zero, and operational cash flow negative 1.5. So of course the numbers I'm going to be looking for or looking at are going to be in their quarterly cash flow report that they released on the 23rd of April. But before we get there, just want to have a look at some of the activities for the quarter. The first maiden shipment of iron ore was in February, and they've done 4 shipments in total. And when you look at the ratio of fines to lump shipped, which was almost evenly split at 49 to 51, that was higher than expected. I think I did read somewhere they were expecting a split of 25 to 75 in favour of lump, but favour of fines. And a company or an iron ore mining company would prefer to have a higher ratio of lump, because there is a premium to lump, something like 20% premium, because lump can be thrown straight into the furnace. And C1 cash cost, which is direct production cost, was $93 per wet metric ton. Now, some of the things stated by management in the activities report did fill me with promise, and I did like them. So with steady state production achieved, they look forward to solid production performance and a reduction in costs in the June quarter. And the most exciting thing that I did read in the activities report, that they are expecting or anticipating improvement in the free cash flows in the coming quarter, with the reduction in capital expenditure and a full period of shipping and sales. And when I show you the quarterly cash flow report, you'll see why I'm excited by that statement in particular. Typically, when a company releases their quarterly activities and cash flow report, I go straight to the cash flows from operating activities. I want to see how the company is performing in operations. That's the most important thing for me. And there are 2 things I look for here. The first one is receipts from customers. And for Fenix, receipts from customers was $30.8 million, not too shabby at all. Now, I usually say in isolation that means nothing. You need to know some sort of trend there. Unfortunately for Fenix, we don't have no trend, because the previous quarter was 0. So this is the first quarter they've received any receipts from customers, and that's a good number in isolation. But the most important thing is to see whether the company is operational cash flow positive or negative, because if a company is operational cash flow negative, they're going to have to do capital raisings, borrow some money from banks, that sort of thing. But if a company is operational cash flow positive, they can fund future growth from operations. And that's the most important thing, is to fund your own growth through your operations. And Fenix was operational cash flow positive to the tune of $21.9 million. And the fact that they said that number should improve over the next few quarters. So they spent $7.2 million in capital expenditure. They did receive $1.7 million because options were exercised. So they begun the quarter with $10.3 million in cash and finished it with $26.7 million in cash, and they have no debt. So the enterprise value is approaching $100 million, and for a company that had operational cash flow positiveness of $21.9 million in one quarter, and that's the reason why I took a small initial position in this company. To be fair, the quarterly cash flow report was not the only reason I decided to take a position in this company. When I looked at that chart, I did get excited about what I saw here. So if we go back to 2018, Fenix was under another name. I can't remember what they were called back then. It's not important. It's not really relevant now. But they were in a suspended state. They did an acquisition of this mine, I think, and they did a capital raising, a consolidation, and they changed the name of the company and their ticker code. So a lot of things were happening during 2018, and there were probably some investors quite upset and pissed off because they couldn't trade their shares during a long period of time. They came back onto the ASX in late 2018. Share price actually went through a bit of a bull period there during the first half of 2019. Shares went from about 2 or 3 cents to a high of 12.5 cents. And then during the second half of 2019, towards the COVID-19 financial panic, shares fell away towards that price of about 2 to 3 cents. But ever since the end of the COVID-19 financial panic around the end of March, start of April, the shares of Fenix have been in a well-defined uptrend, a nice bull run here. The price of Fenix have gone from about 3 to 4 cents to 32 cents when I did this chart, and I think the share price has even gone higher since then. So a really good period to be a Fenix shareholder and a really nice bullish chart. The only negative would be volume. I would probably prefer a little bit more volume coming into the market for this company, and that will show me that there are fund managers becoming interested in this company. But when you take into consideration they are cash flow positive for a quarter of over $20 million with a market cap or enterprise value of about $100 million, a nice bullish chart. All those things combined led me to take a position in this company. And that's all for this video on Fenix, the company. I also own a Fenix watch, a Garmin Fenix watch. So if you have any questions about Fenix, the company, even a Garmin Fenix watch, make sure you leave a comment in the comment section and I'll answer any questions you might have in the next few days. Otherwise, I'm not a financial advisor, so if you do need any financial advice about your own financial circumstances, make sure you seek out someone who is qualified and can speak directly to you about your own financial needs. That's all for this video. Have a good day. See you later. Bye.